Hey, what's going on, guys? It's the Crypto Siege with another day in the life, in the crazy life that is the digital asset space. Good morning. Happy Sunday to you. Oh, it's nice to wake up this morning. I got to tell you what, it was really, really nice to wake up this morning to see BTC at 10,000. It actually went over a little over 10,000 this morning. So that is great news. The market is doing its thing. So listen, we're still, waiting for the dominance thing to change for altcoins. For those who are holding BTC, is cool. I did see something on Twitter that, liquidated $75 million in shorts for BTC. So that move, the market, yeah. So the big players know how to manipulate the market, right? So we're so early, it's still an asset class that these kind of things can happen. But it won't be very long, it won't be too much longer before that will be no longer the case. It's the big boys moving like back, TD Ameritrade, Fidelity, these guys start to move in, the banks start to move in. That manipulation thing that they're doing now, those days are numbered for sure, guys. So just remember that. That's why we love at the Celsius Network. By the way, guys, just want to let you know again that I am an ambassador and proud to be one for the Celsius Network, Celsius.network. And, that community, the platform, the community as a whole, they promote holding your assets, right? Acquiring and holding your assets and not messing around with these longs and shorts and margin trading and all those different kind of things where you can really get yourself in some big trouble. So shout out to the people, Alex Mashinsky and the whole team over there at Celsius Network for promoting the sound fundamental principles for wealth creation. So I'm really, really excited about that. All right, guys, so listen, I'm going to share some stuff, a couple of things from Twitter. I'm going to go over an article from the Daily Hodl and stay to the end. I'm going to cover some very, very, I won't say disturbing, but interesting news from the tax guy, Clinton Donnelly, about what the IRS is doing and what they do, in fact, know about people holding digital assets from 2016, 2017. So very and beyond, very, very interesting stuff. So, all right, guys, listen, this is your XRP Ripple daily news in around 0 to 10 minutes. All right, guys, so let's do this. So shout out to the Cryptic Poet again, adding value to the community every single day, doing his thing. We appreciate you, my friend. Appreciate you big time. So this is what he put out here. The Ripple, says Ripple Director of Product launches XRP Payments and e-commerce platform. This is an interesting thing. It's going to be about Craig DeWitt. I find it interesting because, listen, we got the Zoom, we got them hooking up with Uphold, we got a lot of access. This is another tool that will have access to WordPress. So let's go over this article from the Daily Hodl on Craig DeWitt. So Ripple Director Ripple Director of Product launches XRP Payments and e-commerce platform. So Craig DeWitt, Ripple's Director of Product, is launching the beta version of PayBurner, a XRP-based e-commerce payment platform. So let's go over that a bit. Ripple's Director launches XRP Payments. Again, use cases. At the end of the day, utility will rule the day. And I'm going to share, by the way, also, I'm going to share an interesting thing from the letter introducing the banks being able to hold digital assets as well. I'm going to share a very, very interesting thing about XRP. So let's make sure you guys hang out to the end for that. So Ripple's Director of Products is rolling out the beta version of PayBurner, an XRP-based e-commerce payment platform. In a new Twitter thread, Craig DeWitt says, PayBurner is designed to make it extremely easy to send and receive instant global payments. How about that? How about moving into that space, Craig DeWitt and PayBurner? But this is XRP based, right? So the moving in, the moving around of XRP is very, very cool for us, especially as hodlers of XRP. The new product, which started as DeWitt's side project, functions as a non-custodial wallet, right? And this is what we're talking about. This are the things that you and I need, right? These are the things that we understand are important, right? The masses don't know anything about a non-custodial wallet. Again, right? The masses that are about to be on board, they don't know about this yet, right? But we do. And so this is the things that we are wanting to use, just like the Sum app by Visa Ben from XRP. Is it XRP Labs? Yep. These are the things that you and I want. We want to be able to be in complete control of our digital assets and not financial institutions. So DeWitt says the responsibility of safely storing the fund falls on the users, as Payburner won't have access to their passwords, right? And this is important. This is if you want more control, if you don't want to wake up one day and head off to the bank, and the bank has limited your ability to withdraw, right? Restricted your ability to withdraw. If you don't want that, then you want to use things like the Sum app, right? And you want to use things like the Payburner app, right? Or this whole thing of the reality of the world, right, is that the banks, if they have your custody in your stuff, they can limit your access to their stuff. Now they'll sing from the rooftop that, oh, no, you're in complete control. But again, we want to be elephants, right? Remembering what happened in 2008, 2019, and not fall into the cow herd with our heads down, just moseying along, thinking everything's okay, right? So Payburner also allows users to send and receive payments using Pay ID, which is really nice, right? Users can set up their Pay ID upon sign up, which they can share to enable global payments. So that combination is great, right? Because Pay ID, I can send to you, you can send to me. We don't have to know 20, 22, 24, and 30 characters of a BTC address or ETH address or an XRP address. We don't have to do it. The Pay ID is like an email address, right? People are familiar with email addresses and how to use them. So you combine it with Payburner, you combine that with Sum, if Sum is going to be able to hook up through Pay ID, or if they're not, I'm certain that Visa Win will make sure that is available. It's absolutely great. So Payburner also allows users to send and receive payments using Pay ID. Users can set up their Pay ID upon sign up, which they can share to enable instant global payments. Look at Craig DeWitt. Craig DeWitt is getting in there and saying, you know what? I'm going to try to hang out with PayPal. I'm going to try to hang out with Visa, right? And how do you do that? You add benefits that PayPal and Visa probably are not going to allow, right? That's how you do it. You put some features in there that PayPal and Visa might not be in a position to do, right? So what else we got? To send payments, users can simply input the Pay ID of the recipient, enter the amount of XRP to send, and click send. As simple as that, right? As simple as that. So again, guys, the OCC's recent news allowing the banks to custody assets is cool because it's going to onboard the masses. And that's what we want. We want more of us in the space. But once we onboard them, we want to hurry them along, if you will. And you always use that in business because that's the way to educate, right? Educate them about the real deal. So like Pay ID, like Payburner, right? Oh, no. You don't have to leave your stuff over there in the bank. By the way, they can shut you down anytime they like. You didn't know that? Oh, yeah, they certainly can. Well, let me show you a better way. It's as simple as using your email address, and you have complete control of it. So again, let's onboard them first. Let's bring them on first, and then we will educate and help them to level up their IQ. So what do we got? So to send payments, users can simply input the Pay ID of the recipient, enter the amount of XRP to send, and then hit send, click send. To request payment, users can input the Pay ID of the person they're requesting money from, enter the amount requested, and add an optional message. Man, look at that. Look at that. Sweet. Shout out to Craig DeWitt, young entrepreneur doing his thing, flexing his muscle and saying, I can compete. And I believe that he can. So the platform also offers one-click e-commerce payment capabilities. DeWitt says the merchant must have a pay burner account to enjoy the easy-to-use checkout feature. To facilitate the process, the Ripple executive points out that they are done integrating the pay burner plugin with WordPress, making it available to approximately 455 million websites. To keep the businesses sustainable, DeWitt says they plan to charge a minimal fee from the merchants, not from you and I, but from the merchants. We expect, this is a quote from Craig DeWitt, we expect to make money from the OneClick merchant payout experience by requesting payments from merchants at 1% of their received XRP e-commerce purchases. Peer-to-peer payments and peer-to-peer requests are not charged any fee. For these are just the merchants that want to accept XRP as payments, and he's giving them a way to do so at 1%. Yeah, so that's competitive, right? So maybe he'll be able to change that and lower it in the future, but that's a competitive rate for merchants, right? 1%. So DeWitt notes that the Pay Burner plugin currently supports Chrome and Brave browsers, with the promise that the platform will be available in more browsers and iOS and Android apps in the near future. How about that? Very, very cool. Shout out to Craig. Keep doing your thing, my friend. Keep doing your thing. So what else I got to share here? This is an interesting thing. I'm gonna go over this really quick, but this is a stock market update. August, the Comex will force contract clause to settle in cash as they can't deliver the physical gold for settlement. Expect a big spike in gold in August. Yeah, what do you think about that? Why do you think the major nations, especially the major nations, and all of the nations around the world, repatriating all the gold, acquiring gold for like at a mad rapid pace for the last 3 to 5 years? This is why. This is why they knew about the Comex rule was going to happen. They knew about it. Of course, they knew about it, right? So truth is there's not enough physical gold in the world to back the appetite for gold buyers. Stock market update, and this is actually out on the SGT report. I'm not going to go over all of it, but it says why physical gold delivery on the Comex in New York is elevated. Physical delivery on the largest gold futures exchange in the world, the Comex in New York, has reached all-time highs this year. In June, more than 170 tons were physically delivered, about 5.5 million ounces. Usually delivery is neglectable. What has changed? Neglectable. An important change in the global gold market occurred on March 23rd, 2020. On that day, the price of gold futures in New York started drifting higher than the price for spot gold in London. Ever since, the spread has persisted, though it continuously widens and narrows. The reason for this disturbance in the market can be read in my previous article, what caused the New York versus London gold price spread and why it persists. So to understand the shift in deliveries, first let's have a look at how the global gold market operated before March 23rd, when things seemed rather smoothly. I'm not going to go over that. He's talking about what happened after March 23rd. So the conclusion is physical delivery on the Comex is elevated because of the current unusual situation in the global gold market. The gold delivered in New York has been imported from spot markets such as Singapore, Switzerland, and Australia. U.S. imports directly from the U.K. are rare because in London, 400-ounce bars are traded, and the main futures contract in New York requires smaller bars for delivery. So since March 23rd of this year, futures have persistently been trading above the spot, though the spread isn't constant. As a result, arbitrageurs aren't assured their future price in New York will converge with the spot price in London. An arbitrage trade, as described above, through a position to both market incurs risk. So the bottom line is, listen, there's not enough physical gold to match the demand in the paper assets of gold is going to cause the physical gold itself to go up in price. And it's a big time challenge when the paper gold and now the demand for your physical gold in return is not enough of that physical gold to go around. Supply and demand at its best right there, right? So, and I'm going to end the video with this because I just think this is hugely, let me go over this first and I'll end the video. This is a shout out from XRP Bart. Boom, a done bit of digging. And this is a one page. This is on page 11, a fiat currency. This is from the OCC. All right, so let me see. I'm going to go here, page 11. Interesting little thing here. Comments regarding the proposal, exploring special purpose national bank charge for fintech companies. And what he's pointing to is here, again, it's always important to note when Ripple and XRP, the greatest digital asset ever created, is mentioned in documents like it always is from important and significant entities. I just read it here. Hold on one second. Okay, there it is there in contrast. So this, and I do think that the fact that they're talking about Bitcoin and then they say in contrast, they talk about XRP, I think is important to know. So play money and the risk of collapse. Advocates of unbacked cryptos refer to national currencies as fiat currencies as somewhat pejorative terms to highlight their discretionary nature, playing to the popular oversimplification that depicts government issued money as conjured out of thin air. Bitcoin, which is the first digital cash to attract widespread attention, is cast as non-discretionary due to the protocol by which new money supply is created on a fixed schedule by means of mining activity. This is characterized as a safeguard to prevent inflation, implying that inflation means expansion of a money supply in excess of whatever would be the proper rate of expansion. The underlying premise is that scarcity of a medium combined with significant costs to produce additional quantities of that medium constitutes an adequate base of value. The lack of centralized control, particularly the lack of a responsible issuer or any issuer at all, in parentheses, is regarded as a feature. The basis of Bitcoin's claimed ability to withstand possible government attacks intended to suppress it. The metrics that attract the most attention and which is widely viewed as validation of Bitcoin's monetary logic is its exchange rate relative to other currency. This exchange rate is entirely a function of demand for Bitcoin, a significant component of which stems from speculative trading by participants, so seeking capital gains. The appeal of Bitcoin as a speculative trading vehicle is enhanced by the lack of any general mechanism for detection of unreported gains, such as central counterparty obliged to file IRS Form 1099. It is like, again, so these, make no mistake about it, these points and highlights are, it's pointing out the fallacies. It's pointing out the flaws that the people like the OCC, the CFPB, right, the SEC, the WEF, the IMF, these are flaws. These are things that they're going to point to as to the detriment of BTC. Just make sure I'm clarifying that. It is likely that the trading experience of the vast bulk of speculators does not predate the aberrant conditions that have prevailed for the past decade, during which time buying the dip has been the key to profitable trading for every class of tradable security. In contrast, XRP, the native currency of Ripple, is effectively a fiat currency. At its inception, Ripple Labs created 100 billion units of XRP, 20 billion of which were retained by the creators, who were also the founders of Ripple Labs. The creators gave the remaining 80% of the total to Ripple Labs, with the XRP intended to fund operations. This is coming out of the OCC, right? Think about how in-depth the knowledge is of what is going on. The monetary policy of Ripple Labs has been stated as, we will engage in distribution strategies that we expect will result in a stable or strengthening XRP exchange rate against other currencies. In other words, only the forbearance of the people sitting on this vast pool of play money prevents release that will kill the golden goose. Unlike government-issued fiat money, no entity has the ability or responsibility to buy in XRP in sufficient quantity to quell a full-on panic situation. The best that can be done is to slow or halt further release of additional money. Again, that is a highlight. Number one, they're talking about XRP is essentially a fiat currency, but they also point out to the fact that the lack of ability of a nation or government to cause inflation by printing money is not there. So, but let me end with something that, guys, I want you guys to just kind of pay attention to this, because this is hugely important. This is from Clinton Donnelly, right? He's known as the crypto tax fixer, right? And he's on Twitter, he's at crypto tax fixer. So I want you guys to hear this. I talked to about 24 clients who received these IRS letters. Almost all had at least 900,000 in Bitcoin at the peak in 2017. That tells me that the IRS had done some significant data mining activity, right? They looked into the data big time, putting together the pieces. They have a good idea who the traders are, right? Who the traders are. Now, for my, for what it's worth for me on the Crypto Seasons channel, I would definitely recommend token tax. Token tax, and this is a link in the description of all of my videos for token tax. I like the people from behind it that are behind the project. I like that they are crypto. Not only they're in this crypto space, they actually own digital assets, easily accessible, and very, very good in coming to you, providing guidance, and the customer service is really, really good. So definitely check that out. But the point is, just please don't think that the IRS is not looking. It will be a matter of time before you have to pay if you got some gains on your digital asset. All right, guys, listen, I'm going to wrap up this video like I do all of my videos and remind you guys of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.